Welcome to another episode of Locking It In with Deb and Pear. I'm Deb.
I'm Pear.
Today is October 11th, 2021. A lot is happening this week in the mortgage industry.
Correct.
Yeah. Why don't you take the lead on this one, Pam?
Okay, so one of my products that I have is the Chenoah Fund Zero Down Purchase. What it is it's an FHA or a conventional loan with FHA 3.5% down first, conventional either 3% down first or 5% down first. Their credit scores were lowered recently. So for an FHA 3.5% down purchase with a 3.5% down payment assistance second mortgage, the minimum credit score is 600. And for a conventional either 3% down or 5% down with the same 3 or 5% down second, the minimum credit score is 620.
Well, that was a lot of numbers, Perrin. Can you put that into practical terms for people that might not?
It's a lot easier to get into a down payment assistance loan now.
So if you want to buy a house that's $400,000, your down payment would be what, 3%?
Either 3.5% for FHA or 3% or 5% down for conventional.
Okay. And the second mortgage, they have to pay it 2 mortgages?
Yes, but for the FHA down payment assistance, there is no payment required on one of the second mortgages that they offer. So it would just be something that gets paid off when it's refinanced or sold.
Okay.
And in some cases, on one of the conventional products, the 3 or 5% down payment loan is sometimes forgivable after 36 months of on-time payments.
Okay.
So it's a really good program. You can get your down payment money, it disappear.
And at the credit score difference, what is that about?
Well, conventional loans are always higher credit score requirements than FHA loans. But 620 is a very lenient credit score for a conventional loan. And 600 is very lenient for an FHA loan down payment assistance program.
And that's what it is now as opposed to before.
Right.
What was it before?
640. And they weren't offering conventional throughout this COVID-19 era. But they are now.
Okay. Good. That means more people will qualify for these programs.
Exactly. I've got one borrower that has a 599 credit score.
This is in addition to renters can use the rent to qualify for the credit as though it were on their credit report.
Right.
Which should have been that way all along. If you can pay rent and stay in the apartment for months and months, even for years and years, even when the rent goes up, that should have been counted all along. And I don't know why it wasn't. Not if you're trying to encourage homeownership all these years.
Yeah, it's the most important factor in determining if someone's able to make a mortgage payment. If they're making a similar rental payment already, then of course they can make a mortgage payment.
Right. And to say, no, they can't do it when they've been doing it for 5 years is kind of dumb. It doesn't really matter the credit score. If you can see in my opinion, if you can show you always pay your mortgage or your rent first and you've never had trouble with it regardless, I think that's a good sign.
It's a good sign.
Yes. Those loans that we're talking about, they're coordinated by HUD, right?
Actually, the down payment assistance loans, the first mortgage is a HUD product. The second mortgage is from an Indian tribe in Utah, I believe. And it's a down payment assistance program that is available to everybody except for the residents of New York.
Is that the Chenoah or something?
Yes.
Yeah. And do they work with the federal government programs at all?
Well, in terms of the first mortgage, they do.
Okay.
But in terms of the second mortgage, it's just
that's their own
product. It's widely known in the mortgage industry.
Chenoah, right?
Yeah, it's widely known.
Okay. And that still, would that require the homeowner education?
With this particular product, if your credit score is 600 to 640, then you have to take their version of the home buyer class. If it's above 640, you don't have to take the class.
Okay, not at all.
Yep.
Okay. Now I noticed that the class, as far as Fannie Mae goes, they changed the requirements. Now they are going to allow third parties to offer the education. And this is something they usually required for homeowners that,
Chenoah has their own program for
yeah,
that. They have their own, they require it.
right,
Yeah, it's different than the other down payment assistance programs.
right. But it's still relevant if you're going to use one of these programs.
Right.
It's good to know this. The at the moment, the $75 fee to take the class has been waived since 2019, which is actually good. I think to charge $75 for that class before you've even found a home to
Just an
buy.
additional cost to buy.
It's just extra money, extra. There's just, yeah, it's really not enough money to justify. Yeah, I think I'm okay with dropping that fee. Non-banks are raising the limit on the amount of mortgage you can get. They raised their loan ceilings by 14% to $625,000.
Yes, and they needed to because sale price values went way up.
Yeah.
This last year.
Yeah. And this was done by Rocket Mortgage is planning this, and Home Point. And it's important to note that they wouldn't be doing this if they didn't anticipate that Federal Housing Finance Agency weren't also planning to do this, which they plan to announce something in November. And that's my guess. Once the prices go up this much, they will raise the limit. That's the natural product of the market, which at the moment is $548,250. So they're raising it $75,000.
Well, they raise the limit every year.
Yeah.
It's just a matter of how much.
But how much? Usually they wait for the guidance from the agency, I think. Is that all we have to say this week,
I
parents?
think so. That's plenty.
That's plenty. And this is October 11th, 2021, and interest rates are below 3% still.
They came down this week a little
A
bit.
little bit. I think it's still a good time to be out there looking for a home. You don't need to be deep into it, but if you have your sights on something, just keep your eyes peeled and keep checking. When you see something, call me or call your realtor as soon as you see something, because you need to see it within a day or two because of the inventory. You want to keep your eyes open. You're not going to find the house you want if you're just going to hit the road hard and look at everything. It might just creep up on you when you're not expecting it. It's good to be prepared for that and not have to worry about your rent going up or changing owners and having to leave, find another place to rent. If you have questions or comments, let us know below or message us. Signing off, this is Locking It In with Deb and Pear.
Thank you.